2023 is already an exciting year in the banking and payments world, maybe too exciting some weeks and some days. And we're going to get our first bank payment rail, our first new bank payment rail since the 1970s, coming out with FedNow in July, which is going to bring the US into partnership with 70 other countries that already have central bank delivered real-time gross settlement payment systems. And it'll also add to the litany of faster money movement options that we have in the US, from same-day ACH, Visa Direct, MasterCard Send, Zelle, stablecoins, RTP, of course, through the clearinghouse. So we're in early days, but we are taking steps towards ubiquitous real-time payments in the US, which is really exciting. And I'm thrilled to be moderating this panel today to talk about, as Aaron mentioned, faster payments, some of the challenges that remain, and the opportunities, of course, that are ahead. And I'm really pleased today to be joined by Stephanie Kirkpatrick, CEO and founder of Orem, Ajay Andrews, product lead for ACH at Plaid, and Nick Thompson, a bank partnerships lead over at Modern Treasury. So I'd love to kick off with all of you sharing a bit more about your backgrounds and maybe one thing, instead of a fun fact, one thing that you're excited about with real-time payments. Stephanie, let's start with you.
All right. Hello, everybody. My name is Stephanie Kirkpatrick, and to whoever made the slide with an F, thank you for diversifying my spelling. I am the founder and CEO of Orem. We are the simplest API integration for fast, reliable payments. And with our single solution, you can move money through RTP, FedNow, which is launching this summer, ACH, same-day ACH wires, and more, spending a lot of time in wallets and Venmo and PayPal type solutions as well. And you get an amazing orchestration layer here. So think about what Amazon does for same-day delivery. You don't care how the package got to your front porch, you care how fast it was. That's what we do for payments. And I think the thing I'm ultimately super excited about is time to money, right? I'm a financial planner by training and by practice. I spent most of my career working in something consumer-facing. And as the daughter of an immigrant, first generation, I saw the time to money problem firsthand in my own life, how fast you get paid, how fast a small business gets its receivables, how quickly wages reach somebody, how fast an insurance payout in a critical moment is delivered not to a mailbox with an overnight check, but into somebody's account and is ready to be used, is why I think faster payments is going to be a fundamental change in the way that the American wallet and the small business owner are able to operate. So that's what gets me excited this year.
Cool. I'm Nick Thompson. As Jenny mentioned, I support strategic bank partnerships at Modern Treasury. So at Modern Treasury, we are providing infrastructure for people that want to build embedded payments experiences within their software products. And so things like reconciliation, connecting to banks, adding different rails, onboarding counterparties, compliance, ledgering, all of the sort of pieces of building software that aren't so fun, that for a long time people have been building in-house, we provide as a service to companies that are building those experiences. And so sort of echoing Stephanie, what I'm really excited about at Modern Treasury, we just get excited about products that people are building and companies that people are building. And there's just a huge opportunity for people to build product experiences and businesses that are going to materially change people's lives. And so the sort of populations that Stephanie just described in the gig economy, and where 1 to 2 days really does make a very meaningful difference to have access to those funds and not be subjected to sort of late fees and overdrafts and all the different ways that a large part of the population is having to constantly think about where their money is and when it's coming. Building experiences that are going to sort of remedy that for a massive amount of people is something that's really exciting, because there's so much work to be done that that I think there's just a lot of exciting work to be accomplished in the coming years.
Hi folks, good to see all of you despite these really blinding lights here. So my name is Ajay. I lead our transfers business at Plaid. As you all know, Plaid is the leading bank connectivity solution in the US. What does payments mean at Plaid? We have an end-to-end solution, so everything from authenticating the account number, performing risk on the transaction, and then moving the money over multiple rails. We have an end-to-end solution for any company in the US. For me, the promise of real-time payments really is like catching up with the rest of the world. I feel in 2023, it's in some ways a travesty that money does not move as instantly as it should. Having lived and worked all over the world, you can see just a change in people's daily lives when money can just move, in seconds. As one example, before joining Plaid, I managed payments at Lyft. And we heard from drivers that they needed money from their shift from the current day to pump gas for the next day, right? And so for me, real-time money movement is not just like a kind of a technical rail, but it's like an economic and societal imperative. So super excited. So we're super excited for that at Plaid, and looking forward to talk more about that today.
Awesome. So 2 quick housekeeping items before we dive into it. First, we're going to have Q&A for the last 5-ish minutes, depending upon how heated our conversation gets. And there'll be a QR code up on this screen soon with a link to Slido if you want to add any questions for us to ask the panelists at the end. And then second, I think level setting on some terminology is useful here. There's a lot of acronyms that are thrown around in this space. And so for the sake of staying on the same page, we're going to use real-time payments to talk about generally the payment method of moving money quickly with a real-time gross settlement system, and RTP specifically to refer to the specific real-time payment rail through the clearinghouse. If anyone has any questions, that QR code will be up there. Okay, so setting the stage with real-time payments in the US, RTP obviously came out in 2017. Many of you already connected into RTP. Today, 275-ish banks are live with RTP, and that's still only about 2% of banks in the US. And of that, 25-ish, 30-ish of my last count were certified to originate transactions. But even with those seemingly low numbers, we still have about 75% coverage of deposit accounts in the US. So we're taking steps. We're not fully there. Transaction volumes are still pretty dwarfed by ACH. I think many of you in even moving money today, real time is still some form of synthetic ACH in the background. But we do have promise. We do have things that are moving. So before we talk about the considerations that each of your 3 companies used in weighing connecting into RTP and thinking about FedNow, I want to take a step back and talk about the adoption and rollout of RTP. And as mentioned, the bank landscape is changing, and there's a lot of things that banks already have to deal with, let alone adding in operational complexity of connecting to this new Fed rail or into the clearinghouse. Managing operations 24/7, 365 is totally new for banks. It's totally new for all of us, let alone every other operational potential fraud complexity that goes into it. But Nick, maybe to start with you from your vantage point at Modern Treasury with bank partnerships, can you share a bit about the learnings that you're seeing from the banks you're speaking with on a daily basis of how they are thinking about the connectivity into RTP and then the future connectivity into FedNow?
Yeah, so from the bank's point of view, there's quite a bit of patience. There's quite a bit of, there's a pretty clear divide actually between big banks who sort of see this as table stakes and see this as wanting to be ready for when the use cases are asked with more pressure. Smaller and more regional banks are still trying to play a little bit of a waiting game. I think there's a sort of uncertainty around whether there's a first mover advantage when they're sort of waiting for the network to mature. And so I think they're trying to better understand how much they should be investing in supporting it and educating their clients about it and educating their relationship teams about it. And so I think a lot of people are trying to wait and sort of see how the actual network matures, how the use cases mature, where the demand is coming from. Is it business to business? Is it business to consumer? And really kind of allow some of the bigger banks that are more heavily resourced to take those sort of first and initial steps forward, and then they can kind of start to follow behind. And so I think, as Jenny mentioned, it's the first time in over 40 years that there has been a new rail, and so I think there's a little bit of rest in the banks in trying to actually understand where they need to fit in terms of actually sort of accelerating and driving that adoption, and whether they can sort of sit back and let their clients come to them with the use cases that are meaningful for them to support. And so there's a little bit of a waiting game from the smaller banks, and then the bigger banks are trying to sort of push forward and sort of claim some of that territory and claim that place as the innovators in the space so that they can sort of keep up that reputation in whatever way they can.
And I've heard anywhere from 6 to 18 months for a bank to roll in RTP as a new rail. Curious, like if I'm a client coming to Modern Treasury and saying, hey, I want RTP, which banks do you have that offer RTP? Or I want this specific bank that doesn't yet have RTP. how are you advising me on the go forward path until I have a bank that I'm working with that has RTP? What do I do if I want faster payments?
Yeah, so it's an area that, one of the areas where Modern Treasury was originally sort of built to solve was actually allowing and supporting multiple bank connections. And so what we find is that there are some banks that are better at one thing, other banks that are better at another thing, quite obviously. And so what we're trying to sort of encourage people to do is kind of hold tight with the banks that they have. If they don't already support RTP, there's still a lot that they can sort of enable and support through their existing banks. But adding an additional bank, which is already top of mind because there's quite a bit of focus right now on bank resiliency, bank redundancy after everything that happened with Silicon Valley Bank. People are already thinking about having multiple banking partnerships within their product, within their business, just to ensure that all their eggs aren't in one basket. And so the way that we're advising is to always ensure that one of the banks that they're partnering with or working with does support RTP and does support FedNow and is sort of making this a point of emphasis so that, again, even if they don't think about these use cases or need these use cases right now, that when the time comes, they're not having to then start that process from scratch. And so making sure they're doing some of that work in parallel to prepare for some sort of inevitability where they start to care more about it.
And Stephanie, perhaps this is a great question for you over at Orem, having actually being in the flow of funds and allowing your customers to be agnostic to the bank that they might be working with operationally. Speak a bit more to how you decided operationally at Orem to choose a bank partner for money movement and how you're helping companies as their operational bank might be getting RTP themselves.
So many questions, all in that sentence. So I think, when I look back on time, right, RTP was this brand new thing when we were founding Orem, and it was hotly debated, as I think, honestly, the debate remains. Is it kind of like the next coming of payments, or is it just going to be another thing that sticks around but is minimally adopted? And I think the answer to that question lies in how much from the innovation economy and from the entrepreneurial side can we push on the ability to help banks, of which there are 10,000, only half of which have even a direct connection to the Fed, have the capability to receive a faster payment. Because much like Visa and MasterCard's networks, which today you can use anywhere, there was at some point with every other network we're used to using a coverage issue. And so I think that the sort of push on ubiquity to be able to receive is actually one of the starting points for adoption of faster payments. So when we looked at the banks that we wanted to partner with, we had a myriad number of things we were interested in. But at the time in 2019 and 2020, as you said, it was very nascently in market, and there were very few banks that even had the experience. It's one thing to have done the technical work and get certified and do one transaction through the clearinghouse and to leverage the new ISO standards. It's another thing to have your APIs beat up, to have your ISO structure stress tested on edge cases that are not going to be in your testing scenario. So we prioritized bank partners, of which at the time there were very few. In fact, at the time there was really only one. That could support us and would have had the experience of having run payments on RTP already. Fast forward to today, and we spend a lot of time helping banks work with Orem in a way that allows for smart and frankly faster routing of what type of rail configuration makes the most sense, in the same way that Amazon kind of sits over UPS, FedEx, UPS, Postal Service, their own blue vans. They care a lot about how the package gets to your front door. You care very little because you focus on time to arrival. And that is ultimately how we think about the network of banks and the capabilities to be able to orchestrate and interact in the back end so that our customers, which can be B2B or B2B2C, never have to think about, is it bank A, is it rail B? It's just a combination of things that never even has to come to be contemplated in the products and services they're building, and can be designed in a way that fully optimizes the best path from point A to point B for the dollar for that given transfer at that given moment in time. And it does factor in, of course, risk, as speed has risk parameters that are different than I think what we're used to seeing in good old ACH, the workhorse of the system.
Yeah. And Ajay, how does that compare with how you thought about it at Plaid?
Yeah, the way we think about it is that the US has this very interesting stage right now in payments where you have a patchwork of rails between ACH, RTP, and FedNow launching. And there really are pros and cons of all these rails between, speed, cost, settlement risk. From a bank standpoint, obviously integrating into RTP or FedNow is not a trivial lift. And so, banks obviously have to really weigh the pros and cons of doing that, either directly or through one of their core platforms. For us, we think, RTP is a great rail. It has, pretty high coverage of US checking accounts. On balance, we believe FedNow, the promise is that it allows a lot of banks who already have a settlement account with the Fed to leverage that. And so we believe especially long-tail banks will adopt Fed. What that means for our customers, so if you're one of our customers in the lending space or gig payouts, the percentage of your employees you can then pay out to goes up with the combination of RTP and FedNow. And that's a win for our customers, right? So when you kind of step back, I think what this means the next 2 or 3 years, you're going to see these multiple rails leading to more end consumer coverage. And in parallel with that, you're going to see the unit cost of payments dropping. And that is going to be the main driving force towards money moving faster in the US.
What do you think incentivizes more players to come onto the system? I think it's a big question that we have right now, as Stephanie mentioned. We are seeing more and more people come onto the receiver side. We're seeing only a few people move onto the sender side. There's this overarching question of what happens from an interchange perspective at banks who are earning $140 billion in credit card fees a year. Like, how do we move towards ubiquity and align incentives with banks to have this form of adoption? I'm curious, like, with the network that Plaid has into banks, is there a role Plaid can play in moving and incentivizing the banks to move towards RTP and FedNow adoption?
Yeah. So we already think of ourselves playing a role in what we call synthetic or instant ACH. So the way to think about this today, we move more than a couple of $1 billion every month over the ACH rails for our customers. And that's because, like, let's take a customer of ours like Robinhood. With the ACH rails, you don't have the instant authentication capabilities like you have with a card rail. But one of our products called Signal, we effectively allow Robinhood to tell them, look, what's the probability of an NSF? And that allows Robinhood effectively to mimic a real-time payment situation there and allow our end user to then go buy crypto or stocks, right? So we're already kind of enabling, synthetic ACH in that sense. When you think about RTP and FedNow, we think of ourselves helping in a couple of ways. The first thing is that we are the #1 bank connectivity player. So if you need more banking rails, you need low friction authentication of account routing numbers. And the US market being the most sophisticated cards market in the world, consumers and merchants are really paranoid about having a low friction experience. And we're really good at that, right? So during the onboarding flow, how do you create the seamless capture of account routing number? And the other role we think of ourselves playing is in the risk. And I think we'll talk about this more, but at a high level, if you look at any market in the world, the adoption of Rails has higher fraud, unfortunately. And we see ourselves playing a role both on the pay-in side of the ACH, but also payout fraud detection with RTP and FedNow. And the last piece is a bunch of coordination that allows our customers to move money on any rail. So for our customers, they don't need to worry about is it ACH, RTP, FedNow in the future, like USDC stablecoin. We just take care of all that abstraction, and we effectively have a commitment to move the money for them.
And before switching to the demand side case that you all are seeing from your customers, Stephanie, I'd love for you to give us a window, if you can, into what it is to being a launch partner with FedNow. What are those conversations like? What are the key questions that they're asking? Can you give us a hint of what's yet to come for July?
Well, I can tell you that in June, I can't give you the exact date, but mid-June, the list of participating banks at launch will be out. And I think that's one of the most kind of hotly waited for things. So I think as a launch partner, being privy to who's actually testing versus whose name is on a website that says they're in the pilot, and working through really interesting use cases. So for example, I think, one of the questions that's going to get asked and has been asked on the screen is like, well, is this going to disrupt interchange revenue or could this ever be available at point of sale? And I think there's a very limited understanding of what even faster payments does. But if you think about the FedNow framework, it does essentially what a credit card does, which credit card's like, I'm at Starbucks, I swipe, and it immediately checks Is it Stephanie? Does this card, is it valid? And is there essentially money available for the transaction? And then it reserves $3. And later, days later, Starbucks gets the $3, less fees. And that's different for everybody who swipes, right? But it's essentially a protection layer. Well, FedNow actually does the same thing. Before it actually issues a transaction in the 15-second round trip, SLA to do an instant payment, it checks the account routing number and it asks the bank that's going to receive the faster payment, will you receive this transaction? So those are, I think, nuanced things that as the market gets maybe more educated, doesn't change that tomorrow we're all going to be paying by bank at the point of sale. Although I'm old enough to remember writing checks, which I think is like paying by bank, if memory serves. So I think we're going to find that like point of sale and other things definitely have opportunities, but ultimately being inside the way that the Fed thinks about their second mover advantage is really powerful, right? Because first mover at the clearinghouse has to get out there and be like, hello, everyone, 50 years later, we're going to build a new thing, and this thing's going to work in a certain way. And that is very hard. So for many years, the Fed had the opportunity to watch what worked and didn't work from an adoption perspective. And I think technically what are some of the capabilities that would be required to support. And I think they got to watch very carefully and then build a similar but different system. The problem ultimately therein is, much like FedEx and UPS can both move a package from A to B, ground or air freight, they can't operate together. And so now we have two disparate systems. And without a technology like Orem to actually bridge and essentially orchestrate between the two, you're going to end up with banks that have one, not the other. And I can't initiate an RTP but land it in a bank that's FedNow receive enabled. And I can't initiate a FedNow and land it in a bank that's only RTP enabled. So what do we do with 10,000 banks, 300 of which are on RTP, presumably 300 of which will be on FedNow at launch, and they can't talk to each other, right? So there's pros and cons of everything that's been, I think, worked through, but starting to press on both the ability to have receive more broadly, pushed out into market, and then ultimately, I think, one of the big topics inside the faster payments committees, and one in particular I sit on, is how do you make the API layer to use these faster payments products cleaner, easier, more uniform bank by bank. And as somebody who's integrated to many banks, I can tell you that the API layer is not uniform. And those are the kinds of things that ultimately block people deciding to use faster payments in the first place, because getting access to them feels hard or difficult. So there's a myriad number of things that you see as you kind of sit, as we sit very fortunately inside kind of the pilot ecosystem and watch what's coming for both the announcement in June on which banks and ultimately the launch mid-July for the first transfer. So time will tell.
Exciting. And two things I think are really important in what you just said there. Stephanie, like one, interchange is fundamentally a feature and not
Yes.
a bug of the card networks. And it is a question of what are those enabling technologies that need to be in place such that we have protections. And the other piece I think you bring up, which is so key, is the interoperability challenge. With the ISO language that is rolled out and promised with RTP and FedNow, we have a chance of having interoperability across those systems. And we even have a chance of having interoperability across international systems like SWIFT or moving over into the UK or Canada. And that's really exciting, but we're also pretty far
We're pretty
from
far
that.
from that. We're pretty far from that.
Yeah.
Same standard, different rules, different messages. It's a long ways out.
Yeah. And Nick over at Modern Treasury, huge value add to customers is from an ACH returns perspective. A lot of that has been built into the software and technology. Like, we have a question that's come up here. Request for payment is another big piece that has come up with RTP and FedNow, or things like disputes management. I'm wondering how you think about that as that enabling layer that sits across multiple banks.
Yeah, so it's a really good question. So related to RFP, I think
RFP, request for payment.
Request for pay, which is the other side of it's the debit side of that rail rather than the credit. But where it gets tricky is there's actually a front end experience. So anyone that's used Venmo and requested someone, you get a message from Venmo saying this person requests $20 and you can accept it. It's a similar experience that's really difficult to deploy in a banking system that's relatively fractured when you're trying to provide sort of a consistent templated backend that also then translates into sort of a front end and user experience. So RFP is a slightly separate piece. I do think it will have a much harder time gaining traction, regardless of whether it's eating into interchange revenue or not, but more so due to just the actual use cases, I think, are a little bit more limited. I think it's really, really powerful in those use cases, but they're just not going to be as widespread based on what we've seen and heard. On dispute resolution, I think it's interesting because ultimately, obviously, you asked this question for me as a technology provider that sits in the middle. I'm actually of the opinion that a lot of it's going to come much more around education in the market and education for the consumers, what it means to be transacting on a different rail. And so, people make irrevocable, transactions all the time. When you go to the store and you hand someone a $10 bill, you can come back and you can get, you can come back and you can return, and if you have a receipt, and there's already a process in place, but people are very accustomed to the idea of making a transaction and then that transaction is just over. And so I think part of it is more so than a technology solution, ensuring that people do have the sort of right information around what this rail is and what the sort of differences are. I think the thing that will be interesting that I don't have a clear answer for, but that I think is going to be really positive about the rail is with RTP, you are actually passing through much more data in the payload. And so, ACH is limited in what you're able to pass through and the fields that you're able to pass through from a metadata standpoint. And so the dispute resolution almost requires something like Modern Treasury in the middle to kind of make sense of it and to add additional data that you can. With RTP, you're essentially going to be able to introduce much more information in the payload itself. And so where someone's going to play, and it might be Modern Treasury, it might be another product or service, is going to be able to figure out how to leverage the data that's being passed through and use it to kind of make smarter decisioning around dispute resolution and around chargebacks and returns and all the things that people are dealing with right now with a more limited data set. So I think that's where it's actually exciting and interesting. I don't know that we have a clear solution yet in terms of how it's all going to be actually addressed.
And it's one piece to have some of these technology interchange, how we move into adoption from a technology perspective. And then there's also this demand piece, which we've touched upon a little bit. We touched upon it from the banks. 84% of businesses say that real-time and faster movement of money is a must-have. My question is faster actually better? Is faster always better? Right? For you, we have two people who are actually in the flow of funds up here. Faster movement of money also means that you touch that money less. And potentially there's implications for your own business model if money is moving in and out of you more quickly. From your own vantage point in business models, how did you think about the trade-offs of running on ACH, slower, a bit more stable, less costly operationally, versus the promise of real-time payments?
Question for me? Yeah.
Go for it.
The way I think about it is that ultimately you have to align your business model to the end consumer's expectation. And the reality is, even though real-time payments is not a thing yet in the US, the consumer expectation about how quickly things have to happen is instant. And that's primarily because in other verticals, you are used to getting things instantly, whether that is like watching a movie on demand or ordering or Uber or Lyft, right? So the consumer is expecting those things, and our customers who are e-commerce companies or fintechs are innovating to meet that demand. What we are seeing is that where adoption is starting to happen is specifically in what we call instant payouts, and that's because the RTP rail is uniquely suitable for payouts versus pay-ins, because as Nick mentioned, RFP is a suboptimal UX and coverage experience. Number two, what we are seeing is that a lot of our customers are using that as a differentiator. So they're saying, hey, you work with a legacy company and your insurance claims or your loan disbursement happens in days or hours. And our differentiation is it happens in seconds. We have a customer that offers early wage access. So their end consumers are people who need a quick loan to pump money at a gas station. So literally they need a loan in seconds, right? And so these are the kind of use cases where we're seeing adoption. And these customers will then typically either pass on those costs to the the consumer, or they bake it into their core value proposition as a means to acquire more customers, right? So that's how we see this evolving. We see like specific use cases where we see there's going to be traction with RTP and FedNow. And then we continue to see, we expect to see demand continue to grow in ACH as well. The reality in the US is that there's a lot more flow of money happening in general because there's more consumer choice. There are more apps. There are more services. So that means money has to move a lot more between FIs, apps, and consumers. And that's really kind of the place we sit in the ecosystem as this crossroad between those three participants. And we're excited for that to continue.
And Stephanie, you had mentioned this earned wage access use case as well. On the Orem side, which type of customer are you seeing is really demanding faster payments, and that use case really makes sense for them?
I mean, the list is long of folks who are demanding faster payments, and for a variety of reasons. But I always come back to just the statement time to money, right? If you think about how long it takes to get any dollar from point A to point B, that holds up what otherwise runs our economy, right? And with the ability to put wages, reimbursements, returns, refunds, invoices, payables, dollars into the hands of either end consumers or business owners faster. Not 3 days later, not 5 days later, not 7 days if it's a weekend or a holiday, but truly instantly. Things that today we're used to having as bridges, like merchant cash advance or loans on income or other forms of bridging this time to money gap, they go away. And ultimately, that means from a financial services perspective, which I think probably everyone in this room is somehow indexed to financial services, what you can build fundamentally looks different. And I think the opportunity isn't to debate the nuances of the networks and the systems and why not. It's to say, if we didn't have to ask the question, how and how fast could money get from A to B for whatever the use case is, what would we build differently? What does our financial system look like when that isn't the problem that everyone is spending time and energy on? Because that can be solved. And that's where I feel like the energy towards, opportunity down the road to say, gosh, instead of doing, like a Venmo-like solution, which is what we essentially created in the US to create the feeling of instant payments, I Venmo Jenny $100. Venmo doesn't have my $100 from Wells Fargo, but they let Jenny go invest in crypto, spend it on a debit card, Venmo it to somebody else, or instantly move it to her Chase Bank account for a fee. And they still don't have Stephanie's $100. So Venmo is just the surface area, right, of making us feel like instant payments. What is Venmo for us today was just request for pay and RTP? Then I think we would be having a fundamentally different conversation about not objecting to like, why would we ever use it, but being like, oh, that is like the most beautiful, easiest way to move money. And it not only works peer-to-peer, oh, by the way, it works for businesses too. And that's where I think we actually have it in our DNA because we've created an app for it. What we don't have is a central bank that, like Brazil, like India, has said, this is going to be the only way. And so it comes back to the complexity of payments is, I think, forever in the US, going to be myriad and tied to more than one settlement system. I don't think we're going to find ourselves in a single settlement universe. And thus, you will always need technology partners to fill gaps, to make settlement easier, to make payments faster. And the use cases that today in trucking, logistics, payroll, wages, insurance, refunds, et cetera, that get me excited are not in 3 to 5 years the use cases I'll be talking to you about. Because we will have solved that by getting faster payments ubiquity, and we'll be solving different things. And I think that's where the ultimate opportunity is.
I wish in some ways our banks were forced to adopt RTP and FedNow like we saw in India and in Brazil. There's a lot of benefit that can come from that, but it's fundamentally not a part of our system. And so until that time, breaking through those incentives and getting banks really bought into this business model is going to be critical.
Agree.
And part of breaking into that business model, it's come up here on the questions, and please keep them coming. We've danced around it here, but is the big fraud question, does faster payments mean faster fraud? Ajay, from your past experience, even before Plaid, thinking through fraud and payments, how did you think about that from a technology layer perspective as you rolled in money movement at Plaid?
Yeah, I mean, unfortunately, like fraud is the other side of money movement. If you look at any rail, unfortunately, fraud happens in different formats. And the reason is that fraud is fundamentally a very high ROI activity. It's a very, unfortunately, very profitable business. So the question is like, what kind of fraud vectors do we see with real-time rails? And one way to kind of understand that is you can look at other markets that are ahead of the US and see what are lessons we can learn. So one market is the UK, which has adopted faster payments for about 12, 13 years right now. About 35% of their volume runs on, TPV runs on faster payments, right? What you see there is you have about 10 basis points of fraud happening on real-time payouts. And the way I think about it is that a lot of the scams we see today on Zelle, like your mule scams or your puppy scams, right? Those get turbocharged when you have a real-time rail, because the fraudster can effectively move money either between multiple accounts, which they control, or they can move money into an account by socially tricking the account holder, right? And so that, unfortunately, we believe is going to follow here as well, right? The question is, what can we do about it? And so I think there are three things you can do when you think about fraud. One is education, and like Nick alluded to that, really educating the customer that there are certain vectors to be aware about. The second piece is how do you incentivize the banks to put in place like fraud checks? And so in the UK, for example, there's been introduction of a shared liability model, and that effectively incentivizes the receiving bank to check if the receiving account is the same as the person using the app. And if those like entities don't match, it's a pretty simple a risk indicator. The third piece is the role we believe players like Plaid can serve. So like I said, we kind of sit between companies, fintechs, banks, and customers. And so we are seeing thousands of transactions and account links happen every single minute, right? So what that means is that like we do on the ACH side with money moving in, we have a lot of intelligence we can bring to the market in terms of, hey, who is this account you're paying out to? What do we know about that account? How many apps has that been linked to, right? And so that's an area we are starting to look at as RTP adoption grows and FedNow becomes a thing, is how can we help the ecosystem, not just the banks, but also all these companies have this form of intelligence that reduces the risk of real-time fraud.
And as we wrap up here, I want us to end with optimism. We've talked about the challenges from fraud. Nick, you mentioned some of the challenges on education. Stephanie, you mentioned some of the challenges in broader technology and this adoption, and starting to think, what does it look like if we live in a world in the US where we have ubiquitous real-time payments? For each of you, what does that world look like, and how is your company helping us bridge to that world? For me, I'll say I'm really excited about what can happen with the ISO language and the amount of data that can be packaged into payments from a fraud perspective, from an automatic reconciliation perspective, from a whole host of use cases, let alone the interoperability that maybe one day we finally will get. But Ajay, let's start with you, Nick, and then Stephanie, wrap us up.
Sounds good. I think if you follow the pattern that has happened in other industries where the kind of underlying layer became more intelligent, more cost efficient, there's going to be a lot of interesting innovation. So one example I'm personally very excited about is just more form of embedded finance and micropayments, right? So imagine a world where you have a certain writer or an artist or creator you support. And today, unfortunately, the way payment economics work is typically you have to pay them at least $5 or $10, right? But what if a world where you could pay cents for a portion of an article or a portion for a tweet, right? Imagine a world where that form of payments were just a thing. So I think there's a lot of innovation and creativity possible when payments are just instant and ubiquitous, and I'm personally very excited about that.
It's a little bit of a cop-out answer, but Stephanie made the point earlier that a lot of the stuff that we're going to be talking about in 5 years, we're not talking about right now because there's so much low-hanging fruit. And I think the thing that's really cool about a sort of seismic shift like this is once you start to go after the lower-hanging fruit and the people that are really demanding it and that are hungry for faster payments, it does start to bleed into other experiences where they're not demanding it. And so it starts to enable just a bunch of small little paper cuts to be removed from a bunch of product experiences, a bunch of payment experiences that we all sort of just accept at this point. I think a lot of people aren't feeling the pain. They just sort of feel this almost numbness to a very, very inefficient payment system. And I think having that sort of inherent friction removed across a broad spectrum of use cases that do start to allow people just innovate more rapidly, build more rapidly. To me, it's more to the sort of imagination side of just finding use cases that no one's thinking about, and knowing that there's people out there that are thinking about this every day and thinking about how they can build meaningful product experiences, meaningful businesses that are just unblocking people that need to be unblocked. And so again, from Modern Treasury standpoint, everything that we can do to make the back office of building those products and experiences easier, we're going to continue to do, but I'm just excited about all the entrepreneurs out there that are going to take advantage of this kind of new foundation to build cool things. I'm
+1 to that. I think for me, what gets me excited, and if we could fast forward and today, this was ubiquitous, we weren't thinking about it. $2 trillion for American households sits idle in checking accounts. And I know right now, the yield is a little better than it once was, but even in a checking account, it's not great. And with faster payments, that money is sitting in, at a minimum, a high yield savings, perhaps decoupled from where the demand deposit account sits. It's sitting in a brokerage account in the stock market. It's in a crypto wallet. It's in a place where, and probably vehicles that haven't been invented yet, it can earn money and return, and that wealth can be built, and it isn't sitting idle. And the concern that as an individual, I wouldn't want to put it there because I couldn't get it back at 2 a.m. on a Sunday when I hear that my mom died and I have to buy a plane ticket and I don't have any money on my credit cards and nothing in my bank account, that fear goes away. And the willingness to put money where it actually belongs, which is in yield earning and wealth building vehicles, even if it's small dollars, becomes possible, not only to exist, but to become automated. And the ability for that money to flow seamlessly, point to point, in and out of different financial products fundamentally changes not only the way our economy will be structured, but the way that Americans get an opportunity to think about building wealth. And that is just one of the things that I think is such a North Star of why faster payments should exist and why we should collectively continue to work on fraud, challenges, adoption, UX, whatever the hurdles are, because having that easy button for your financial life could dramatically change financial outcomes for households today that just let it sit in cash because of all the reasons, mainly ACH based, that you can't get it back on the night weekends or holidays when money isn't moving and banks aren't open. So I'm excited about that one.
Likewise. Well, thank you three so much for joining us. Thank you all for staying a few minutes over, and let's get to that ubiquity. Thanks so much.